Folks, welcome to the Contrarian Trader. This is Robert Desmond. What I want to discuss today is the art of putting in a stop-loss order and the value of using a stop-loss order. So let's take a look at the chart. Let's begin with a daily chart of AND stores. And you can see that on last Thursday, the stock saw some resistance at, say, 39.25. It closed off the highs of the day, as you can see by this topping tail. Then on Friday, it opened up. It had an inside day, meaning it didn't make a new daily high. It didn't make a new daily low. It still held support at 39. But we identified AND stores a couple of weeks ago as being an extreme overbought candidate, and I've been wanting to short it for some time. However, what we do our due diligence, and I told members, be careful of the short interest in the stock. There are 12% of the shares that are short. So if we open up a short position, you need to A, build your position, never open up your intended position all at one purchase or short. Meaning if you intend to short 500 shares of AND stores, your first opening position should be 100 shares. Then you build your position. And by doing so, you save yourself, in case you are stopped out, from taking a large loss. And that's the name of the game. I don't promise much in this business because there are very, very few guarantees that can be offered. And that's all honesty. But one of the guarantees that I can make you is this. And I tell my members all the time, I guarantee you that you will lose money. It's just a matter of how much. Are you going to keep your losses small, or are you going to let them run and lose more money and take a big loss? I prefer the small losses. So with AND stores, we identified up front, because we knew the 12% short interest, this is a healthy stock, a very healthy uptrend. The probability of us making money was 50-50. Because the stock is overbought, it's ripe for correction. However, there are shorts in the stock that can get squeezed. I don't want to keep repeating that, but it's important. So let's drill down to a 30-minute chart. On a 30-minute chart, I was watching the stock. You can see the slow stochastics were in a downtrend. So the stock was showing a little bit of weakness. So we saw that it began to make new lower highs, but yet was holding support here at, say, 37.80. So we draw the bottom of our band, or the trading range, at 37.80. 37.87 actually is the bottom here. Then we drew a trend line across the top, and you can see how it's trending down, which is a good thing. However, what you could be looking at here is one of two things: either A, a consolidation, or B, a stock weakening and beginning to break down. What many people misinterpret about technical analysis is that you look at a chart and the chart tells you exactly what's going to happen. No, nothing could be further from the truth. The truth is, technical analysis shows you probabilities, the probability of something happening. And then the stronger the probability, the more risky and aggressive you become with your bets. With AND stores, we saw this as being a 50-50 shot, either consolidation or a breakdown. So we took a small opening position. And we knew where the shorts were going to cover. If it broke out above this declining downtrend line on a 30-minute chart, you knew the shorts were going to cover their short positions. And you did not want to get squeezed like they did. When I sent out an alert to members notifying them of the fact that we opened up a short position on AND stores, I put right in the email where we were going to stop out. It was right here. And the minute that we broke out on not just a breakout on rising up volume, very, very important, we knew you got to get out. And it didn't require me sitting there going, oh my gosh, should I get out of the stock? No. You set the computer up to do the work for you. Go back to your day job. Your computer should be doing all the work for you. The minute you open up that trade, you should know where you need to get stopped out. You enter your stop loss, and you go back to your work. There's no reason for you to be sitting over a computer, should I get stopped out? Because that's when hope sets in, when you should be fearing. Okay, again, when you watch a breakout and you begin to lose money, you begin to hope when you should fear. So that's my lesson today on AND stores. We're going to be looking to short ant stores once again in the coming week. I think that since we're on the 30-minute chart, I think that we're going to get a breakout, an attempted breakout above 39.78. We'll watch and possibly get short ant stores once again, but that's my risk to reward lesson for stop loss orders. Hope you enjoyed it. Please, folks, right up top here, click subscribe to my channel. I'd appreciate it. Get notified of my future videos. I think there is some value. You don't get many people that speak about how to stop out of stock. All they want to do is tell you how much money they made, and half of them are full of crap anyway, okay? I'm telling you about a loss I took. There's no shame about it. The shame would be is if I said, you know what? I promised myself to get out here, but I'm still in the stock up here short, losing money. That's where the shame comes in. We shorted the FXC in an oversold condition last week, made a profit, and CWH, so REIT, we went along with that last week. We took profits on it on Friday. So it was a good week overall, but we'll be looking to short ant stores. Subscribe to my channel, please, or you can go to my website, enter your email address, and you'll get notified via email when I prepare a new video. And have a great, great trading week, folks. Talk to you soon. Bye-bye.